Hello and welcome to another video on my YouTube channel. My name is Joris, and today in this 8th and final part of this series talking about European ETFs that invest towards European companies, I'm going to name all the ESG based ETFs that I found for making this series. So for this series I'm discussing 41 ETFs in total that invest in European companies and that are also based in Europe, so they are all UCITS ETFs. They distribute a dividend and they are not synthetically or swap-based replicated. If you know of any other European-based ETF that I missed, so after this video you have heard all 41 ETFs, please comment the ticker or the ISIN code down below in the comment section, and I promise you in the next year when I revisit this series I will include that ETF for sure in my series as well. So I started with the MSCI Europe Index, and most of the time I refer to the MSCI Europe Index as the base mark. So if they are overperforming that one, I think it's a really good ETF. If they are underperforming, it is a little bit underwhelming then, but it's up to you what you like. It's not financial advice, it's just my personal opinion, of course. Then in the second video, I talked about the Euro STOXX 50 and the STOXX Europe 50 index ETFs. And in the next 6 videos, then I talked of all the other ETFs. In this video, I'm going to discuss 8 ETFs in total, but 5 of them you have already heard in the previous 7 videos. So just be aware, it's a little bit of a repetition. But the 3 that are coming, they are actually really good, especially the TEET one. That's a nice one. And then a fairly new one as well. So there we have to see what it's going to do in the coming years, because it's it's only been around for a little bit over a year now, or not even yet. So let's see what it is. And just remember, I recorded all these videos in the weekend following the 11th of July, so it's all numbers that I have from the end of the trading day of the 11th of July of 2025. And maybe we are already 2.5 weeks or 3 weeks further than when I was making these videos. And I'm really happy that it's the last video, because I think my voice needs some rest right now. Yesterday was a long day, and today, yeah, it's good that it rained today. Then my wife wasn't complaining that much that I was recording so many videos in this weekend. So the first one, the E5 ESG, and I ordered the ETFs according to their performances. So you will see that the 5-year performances will go down once again, so immediately you know that the E5 ESG ETF is the best performing one. It was already in the Euro STOXX 50 video, so the second one of this series, and there I already said that it performed exceptionally well. Total expense ratio is 0.10%. You can buy one share for 19.60 euros on the SIX stock exchange. It has 50 holdings where it invests its money towards, and there is a little bit over 2 billion invested into this ETF. It's a fully replicated type, and in the past 5 years it is up 100.85%. So only the value factor ETFs that I discussed in the previous video performed slightly better than this one. So that's really nice. Those ETFs were really good, but it depends upon how the situation on the stock market is, and here I believe it's more to do with the companies and not with the valuation of the companies. You have 2 dividends per year in February and August, because it's a UBS fund, of course. Dividend yield is 2.50%, and here you have the 2 latest dividend payments that it made in the past year. Then you have LDEG, the beloved ETF that my wife and I invest towards for our ETF portfolio, where we aim to have a higher dividend yield than 4% because you know my rule of 300. So when I invest 300 euro or Swiss francs, I want to receive 1 euro per month in dividend on average. So that means that you need to have 4% or higher as a dividend yield. And LDEG is really close to achieving that. EPVLD is of course better. You saw that in the 5th video of this series. But okay, back to LDEG. There's a total expense ratio of 0.25%. The one share costs 13.442 Swiss francs on the SIX stock exchange. It invests towards 144 holdings and there is 208 million invested towards this ETF. Sampling type, and yeah, it's not around for 5 years yet, but it's getting closer and closer. A little bit less than a year to go. And then we will have a number here, but in the past 3 years it is up 78.05%. Pays out quarterly payments and the dividend yield is 3.92%, so really close to the 4%. And these are the dividend payments that it made in the past year. Then we can go over to the TEET. So the former name is VanEck Sustainable European Equal Weight. So they just removed the sustainable because it's not that catchy for some people to see sustainable, so they avoided that word right now, and now it's called VanEck European Equal Weight Screened UCITS ETF. So it's still ESG based, and the total expense ratio is 0.40%, so quite expensive for a VanEck ETF. It's a Dutch based one. VanEck is a really good ETF company, makes excellent ETFs, especially the TEET ETF from VanEck is a really good one. But it's really good if you live in the Netherlands and if you can reclaim the 15% withholding tax from the Netherlands. So just keep that in the back of your head every time when you deal with Dutch ETFs. You can buy one share for 77.04 Swiss francs on the SIX stock exchange. It invests towards 101 holdings and there is 63 million invested towards this ETF. The past year it is up 13.55%. The past 3 years it is up 49.78%. And the past 5 years it is up 82.68%. So this is one of the 3 ETFs that are new and that will contribute to going from 38 earlier discussed ETFs to 41 in total. So this is the TEET of VanEck, which pays out quarterly payments and has a dividend yield of 2.54%. And here you can see the dividend payments. And I really like the strategy of VanEck. They don't make it overcomplicated with 4 or 5 numbers after the dot. No, just 2. So you get what you see. It's nothing to do with rounding up or rounding down. Here you have one share, you receive 0.14 euros. And it's finished. All the other ETFs that you saw, they are all 4 or 5 numbers after the dot. And then when you have one share, you only receive 0.14, although there is 0.14449, you only receive 0.14 cents. So 14 cents you receive. That's really annoying, especially when you are a small investor. It makes a difference. So I like that VanEck makes it simple and says, no, I'm only going to pay out a number which is rounded to 2 dots, 2 numbers after the dot, and that is what they are going to receive. The rest of the money we are going to keep ourselves and we are going to pay out that the next time. That is perfect. I wish other ETFs would do the same thing. Then we have HEDJ, the second one that is new for this video that I haven't mentioned before. So the WisdomTree Europe Equity UCITS ETF USD hedged. It has a total expense ratio of 0.58%, so it's the most expensive one of the bunch. but it's still the third ranked ETF or fourth ranked ETF in this video. So it's definitely not underperforming all the rest, although it has such a high total expense ratio. So that is one that, the one that confirms the rule because it's the exception. And you can buy one share for $27.58 on the SIX stock exchange because it's US dollar hedged, of course, so everything is in US dollar. But I gave the dividends in euro and I also gave the performances in euro in order to be able to compare everything against all the other ETFs. So the currency of the dividend is also US dollar. It's the only one, and it's important that you know that. So a normal person in Europe wouldn't buy this one, for sure. It's only people that come from USA that start an account number here and want to invest their US dollars here. They can invest towards this WisdomTree ETF. 125 holdings into this ETF, and there is only 23 million invested into this ETF. Fully replicated type, but in the past 5 years it is up 76.16%. The past year it is only up 0.56%, but that's not such a big surprise because it's US dollar hedged and the US dollar is really weak right now, so it lost a lot of value due to the tariffs, due to the fact that the Fed didn't lower the interest rates. So yeah, everything is going against the US dollar right now, so that's why it lost a lot of value, and that's why you see that the performance is really low in the past year. Pays out 2 dividends per year in January and in July, and the dividend yield is 2.30% as set in euro. And these are the dividend payments that they did in the past year. And then we have the EEI. So I already mentioned that in the previous video as well. WisdomTree Europe Equity Income UCITS ETF, total expense ratio 0.29%. One share is available on the SIX stock exchange for 12.396 Swiss francs. It invests towards 254 companies and it has 63 million invested into it. Fully replicated type, and in the past 5 years it is up 72.58%. It pays out 4 dividends per year, so it's one of those two that WisdomTree changed from half yearly dividends to quarterly payment. So I really like that they did that move. So it used to be only January and July, but now they also pay out in April and in October, and the dividend yield is 5.68%. As mentioned earlier in the other video, that's the highest dividend yield of all the ETFs that I've mentioned in this series. And these are the dividend payments that it did in the past 12 months. Then we have EPVLD, the UBS ETF Factor MSCI EMU Prime Value ESG UCITS ETF. So that one was in the 7th video because it's a multi-factor ETF. Total expense ratio of 0.25%. All the multi-factor ETFs had a total expense ratio of 0.25%. And you can buy it either in euro or in Swiss francs on the SIX stock exchange. It invests towards 60 holdings and there is 72 million invested into this fully replicated type ETF. And in the past 5 years it is up 72.49%. Pays out 2 dividends per year, UBS fund, and it has a dividend yield of 2.86%. Then you have Amundi STOXX Europe 600 ESG 2 UCITS ETF distributing with a total expense ratio of 0.19%, a German-based ETF, CB1EU6, and you can buy one share for 52.18 Swiss francs on the SIX stock exchange. It invests towards 477 holdings, so normally you expect to have 600 companies, but it's It knocked out all the companies that didn't obey to the ESG norms that they want for their companies. So they only have 477 companies remaining. There is 193 million invested towards this ETF, and in the past 5 years, it is up 68.15%. So once you see a number that is lower than 73, 72%, you know that it's underperforming the MSCI Europe index. And that one has around 397 up to 412 or 423 companies in it, according to which ETF you are looking at. You have one dividend per year, so once again, in month July, August, or September, I don't like that at all. It's not consistent, and dividend loving persons love consistency. So this is so inconsistent that people don't like it. And even though it has a dividend yield of 2.57%, I don't really like this kind of ETFs that only have one dividend payment and then it still fluctuates a lot. So one year it is in September, the other year it is in July. You can't rely on it, so that's really annoying. Okay, the dividend is certainly going to come in one of those 3 months, but yeah, if you rely on your income from your dividends, you need to know when it comes. So if I want to give one tip to Amundi, stop with fluctuating so much with dividend payments. And then you have the final one, so the 41 ETF of the series. So the series is finally complete with the JPMorgan Europe REI Equity SRI PA Active UCITS ETF. If you have more acronyms in a name, or how do you say that? Short names for a lot of terms that you don't need in a name, then JSED is spanning the crown, so they are winning that one. The total expense ratio is 0.25%. You can buy one share for 26.075 euros on the SIX stock exchange. It invests towards almost 200 companies, so that's not bad. Only 8 million invested into this ETF so far, and I say so far because it's also the youngest one. So it isn't around for a year yet. So in the next slide, when I give the overview, and you see that yeah, the total for 1 year is 5.41%, just know that the year isn't over yet. So it still has about 5 months to go, until the 5 months and a bit to go until the year is over, and 5 months to go until it reaches 1 year to have a number here. But I have to put in one number, of course, so I put in 5.41. I believe that I did that. I don't remember exactly. I made the presentation yesterday. I'm making the video now, so it's a bit difficult. It's going to pay out 4 dividends per year, and so far it paid out 2 dividends, so in April of this year and in July of this year, only recently, so exactly 2-3 days ago, they paid out their first dividend, or they went ex-dividend, I should say, because I don't believe they already paid it out. JPMorgan is known for paying out the dividend almost 1 month later than the ex-coupon date, so keep that in mind as well when you buy this ETF. So the dividend yield for this one is still unknown, so hopefully next year when I revisit this series, I have a number here and I have a number there, because I hope that they don't close this ETF, because I really want to know what is going to perform with all those sources in its name. Next time I will explain all those shorts so that you know what I mean. But I think the P stands for Paris, or something like that. So it's really enormous what they put in those names, JPMorgan. So this is the overview of the last ETFs and for the last video of this series. So E5 ESG, the Euro STOXX 50 ETF, which is ESG based, has a 5-year performance of 100.85, so only slightly underperforming the IEDL and the EMV of the previous video, which had 101.57 and 101.45% of 5-year performance respectively. And what I truly like is that the total expense ratio of this one is 0.10 compared to the multi-factor ETFs, which had 0.25. But you can see here you have the HEDJ with an expense ratio of 0.58. Of course, that's the hedged one, the US dollar hedged one. So yeah, that costs a lot. And for some people, they prefer it, especially the people from the US that invest their money here in Switzerland. They like these kind of ETFs. That's why they exist, of course. But when you're from Switzerland or from Europe, I don't believe you need this kind of ETFs, so stay away from them. And just deal with the fact that when you invest towards America, for example, and the US dollar drops, that your investment is going to be worth less in euros. One day the dollar is going to gain in traction again, and then your ETF is going to go the other way. So one time you lose and one time you win. It's just the way it is. Just keep in investing. Consistency is king and key. And with that being said, thank you for watching to this one. Please consider subscribing to my YouTube channel. Hit that like button as well. That helps out the channel enormously. Thank you for watching to this one and see you in the next one on my YouTube channel. Bye.